Oh boy, oh boy, oh boy, oh boy, oh boy. Do we have a lot to talk about today? Good morning, my name's Kenny Polkar and I am your host of the party. And today is July 28th, 2022. It's a Thursday, the day after Wednesday when we had the Federal Open Market Committee meeting. And what did Jay Powell say? And what did he do? And what does that tell us about what's happening in the future? Well, he raised rates by 75 basis points and he promised more and then he promised less. He says we're not in a recession. And then the White House confirms that by saying we're not even in a pre-recession. He also promised that the Fed was going to be less transparent going forward, which is an interesting thought. And stocks exploded higher. But will they retreat? And what do we have for dinner tonight? Well, it's an appetizer, and it's called Camille's Summer Prelude, but we'll get to that in a moment. So like I said, stocks exploded higher on the back of the latest Fed policy statement, the NASDAQ, and tech in general rising by 2 times greater than the broader market as JJ raised interest rates by 75 basis points, which was expected. He makes it clear that we could see another 75 basis point increase in September, because remember, in August they're on vacation. He also tells us that it's still possible to navigate a soft landing, which I think is comical, and that we're not in a recession, even though the economy is slowing and spending is softening. He also said that the committee has decided that maybe they should be a little bit less transparent on future moves. Future moves will now be made on a meeting-by-meeting basis and not by guiding ahead of time and not by leaking it to Goldman Sachs, which is another comical comment. It's an interesting position, especially at this moment in time. And while he didn't define the date, he also said that at some point it will be appropriate to slow down the rate hikes. And the algos took that to mean rate cuts. And before you could say, what did he say? The algos went into overdrive. Sell-side supply getting canceled, leaving a void in the supply chain, while buyers, representing demand, tripped over each other, trying to buy stocks first before they could get more expensive. Think price inflation. The White House wasted no time in sending out Press Secretary KJP, Karen Jean-Pierre, to say that while JJ said we're not in a recession, they want to make it extra clear that nor are we in a pre-recession, which is really funny. Why? Because it's called the business cycle. Econ 101 defines it as the boom and bust. Econ 201 defines it as expansion and contraction, and Econ 301 defines it as pre-recession and recession. Because if we're not in a bust part of the cycle, then we must be in the boom part. If we're not in the contractionary part of the cycle, then we must be in the expansionary part. So the logic says if we're not in a recession part of the cycle, then we must be in the pre-recession part of the cycle. See how I did that? Amazing, isn't it? In any event, stocks blasted off yesterday. By the end of the day, the Dow added 440 points or 1.5%. The S&P rose by 102 points or 2.6%. The NASDAQ rose a stunning 470 points or 4.1%. The Russell tacked on 45 points or 2.5%, and the transports rose by 235 points or 1.7%. Now, while the action was fascinating, let's not get all giddy just yet. Let's remember that the data is weakening. Rising rates are causing a business slowdown, a housing slowdown, and a consumer slowdown. Rising prices are causing pain across the board for everyone, business owners and consumers. Yesterday revealed that weekly mortgage apps fell again, down 1.8% from a week ago. Retail inventories rose by 2%. Wholesale inventories rose by 1.9%, signaling that the consumer might just be getting a bit tired. Brian Deese, on the other hand, the economic advisor to the president, flipped that idea on its head, saying that multiple companies may have over-ordered inventory. It's laughable. While pending home sales fell by a stunning 20% year over year and down by 8.6% month over month, reflecting the rising cost of home ownership. Look, 30-year mortgage rates spiked higher, going from 5.3 to 5.8%, and that's up from 2.9 in January. To make it clear, a $500,000 mortgage in January would have cost you $2,081 a month. Today, the same mortgage will cost you $2,935 a month, a $900 increase or 43% more, all while food, energy, and durable goods inflation move up as well. And speaking of durable goods, we also learned that they rose by 1.9%, which is bullish actually. But it's that rise in durable goods, a direct result of the idea that you better buy it today because tomorrow it's going to be even more expensive. More than likely, that is the reason. But look, let's just not go there right now. And then DoubleLine CEO Jeffrey Goodluck, you see him all the time, he told us last week that the Fed absolutely needed to raise rates by 200 basis points at yesterday's meeting to reestablish credibility and get out in front of the curve. He did a complete 180 after yesterday's announcement, saying that, the Fed is no longer behind the curve and that Powell has regained credibility on his 75 basis point move. I just want to know what he's drinking in his Kool-Aid. Everything was on fire yesterday. Tech up 4.3%. Communication stocks up 4%. Consumer discretionary up 3.8%. Energy up 2.3%. Basic materials and financials and industrials all up by 1.4%. Healthcare and real estate up by 0.5%. And utilities gained 0.1%. And that makes sense, right? Utilities are boring. Disruptive tech ARC rose by 6.7%, while the short disruptive tech lost 6.7%. Semiconductors rose by 4.5%. NVIDIA rose by 7% to end the day at $178 a share. All while Nancy Pelosi tries to convince us that her husband, who made a $5 million bet on NVIDIA last week when it was trading at $161, sold his position for a $369,000 loss. I mean, it's hysterical. Artificial intelligence rose by 3.8%. Coal and natural gas stocks up by 4.5% and 3.5% respectively. Metals and miners rose by 3.4%, and triple leveraged S&P long rose by 8%, while the triple leveraged S&P short fell by 8%. And then we got a slew of earnings reports, and as expected, 70% of the reports beat the lowered expectations, leaving 30% to disappoint. And all of them expressed concern about what the future looks like. So there's nothing new to report there. And after the bell, we heard from Meta, right? The former Facebook. And Marky Mark told us that he is worried about the future as well and expects it to be more severe than originally thought. This, as he reported, the first ever revenue drop and the first ever sales drop, right? Ad sales drop, lower ad spending, right? Causing some on the street to lower their price targets. Oh my God. In his remarks, he also made it clear that Facebook and Instagram will dramatically increase the number of posts that you see from people that you don't follow. This, his attempt to build a discovery engine that is designed to show you other kinds of content. This assumes I want to see other kinds of content, which I don't. I want to see what I want to see, not what you want me to see. So back off, buddy. Just FYI. They took the stock up 6.5% during the trading day yesterday to close at $169 a share. And then they took it down 5.5% in the after-hours session. And this morning it's quoted at 160, 161. In any event, expect the chatter today to be all about dissecting the Fed commentary. Others are going to focus on Meta and Teladoc, which, by the way, just reported a wider loss and much weaker guidance. That stock is quoted down $10 or 25% on the opening. So especially in light of today's second quarter GDP report, which the Atlanta Fed revised to negative 1.2 from negative 1.5, all while the consensus estimate of polled economists is calling for a plus 0.3%. So sit tight, because this is going to be very interesting. I can't wait to see how the sides line up on this report once it comes out at 8:30, which is only moments away. This morning, U.S. futures are down, not big, but they're digesting the explosive move from yesterday, right? Dow futures down 60, S&P's off 18, NASDAQ down 120, Russell off by 2. Recall that since the Fed is starting raising rates, we have seen the markets react positively on the day that he does it, and then they digest and reconsider the move and commentary only to sell off over the following days, making new lows. Is that what we're about to see again? Well, no one knows yet. Late last night, Chucky Schumer announced that he carried Joe Manchin over the line to pass get ready for this one, the Inflation Reduction Act of 2022 bill. This bill will spend $370 billion to fight climate change and look to curb carbon emissions by about 40% in 2030. It also includes a $7,500 tax credit for buying a new EV and a $4,000 tax credit for buying a used one. but only if you're a lower or middle income consumer, which are exactly the people getting hit the hardest right now. And you think they're going to go out and spend $80,000 on a Tesla? Joey wasted no time in telling us that this bill is going to create thousands of new jobs, while urging the Senate to advance the bill ASAP. They are set to vote on this by next week, and then it goes to the House, and then it goes to Joey's desk for his signature, if it passes. If it passes, it's going to be seen as a Democratic win, just ahead of the midterms. Interestingly enough, though, no one has mentioned Kyrsten Sinema. Where does she stand on this whole thing? Notice she's kind of dropped off to the wayside, so expect to hear more there. We're due to get another 50-plus earnings reports due today, but the big ones are going to be after the bell. Apple and Amazon. Expect that they will dominate the conversations today. Yes, they're going to mention all the others that report, but the focus is going to be on these two mega cap, widely owned, economy-defining stocks. Right? So look for results this morning from Stanley Works and Masco and Hershey and Northrop Grumman and T. Rowe Price and Pfizer, Merck, Southwest Airlines, Valero, MasterCard, Honeywell, BTU, Philip Morris, iPaper, and the list goes on. And yes, if you're still wondering, the yield curve is still inverted. The 2s yielding 2.97, the 5s yielding 2.82, and the 10s yielding 2.78 in complete disruption. And oil is trading at $99 this morning, right in line where it's been trading. Yesterday we learned that crude inventories are lower, right? They fell by 4.5 million barrels, while gasoline demand is up 8.5% over the week. Exports of U.S. oil rose to a record high. And why? Because West Texas Intermediate trades at $99. It trades at a steep discount to Brent crude, which trades at $108. And that makes it more attractive to foreign buyers, especially when you see the dollar weaken just a bit, making it more attractive. Remember, oil is priced in dollars, so a weaker dollar is bullish for foreign buyers, while a stronger dollar is bearish for those same buyers. In Europe, markets are slightly lower, as they're also dissecting and digesting the latest Fed comments and what it means potentially for the ECB, along with the deluge of earnings reports hitting the tape over there, right? The same story. Markets across the region, they're down just about 0.2%, nothing dramatic, which, with the exception of Italy, by the way, which is up 1%. And that makes sense only because it's the worst performer across the Eurozone, right? It's down 21% year to date. So investors are scouring the Italian countryside looking for bargains. The S&P closed last night at 4,023 after trading as high as 4,039 and as low as 3,951. Also, unbelievably, we closed the gap created on June 10th. Remember, that was 4,018. And that means that there could be further gains ahead until we get the next negative headline. The S&P is now in the 39.20, 41.25 trading range. 39.20 is trendline support, but not really expected to be strong support. The headlines are still too skittish, and one really negative headline is going to cause the algos to go into a sell mode frenzy. I still think that 3,600 represents the bottom, and I wouldn't be surprised if we tested lower towards there. Okay, so what's for dinner tonight? It's really an appetizer, and I'm calling it Camille Summer Prelude because, well, you have to know Camille. But anyway, so this recipe came to me from my good friend Camille, who just threw a big birthday bash on Nantucket Island. And this dish was the perfect prelude to the dinner. And maybe we'll get to the dinner tomorrow. But it's a cremini mushroom stack. All right, so for this you need cremini mushrooms, garlic, extra virgin olive oil, Himalayan salt, a French baguette, fresh mutts, sliced summer garden tomatoes, and of course you need garden fresh basil. You want to begin by sauteing the mushrooms in some garlic and olive oil, right? Add a dash of the Himalayan salt and then set it aside once they're all nice and sauteed. Set them aside. Take the baguette, cut it in half right down the middle. Brush both sides with the extra virgin olive oil and then pop it under the broil to toast it. Do not burn it. Pull it out, set it aside. Now you want to build the appetizer. You want to layer the toasted baguette with the sliced mutts, then the sliced garden fresh tomatoes, and then naturally some fresh basil on top. Season it with a little bit of that Himalayan salt. Top this with the sauteed mushrooms. Then put a little drizzle of extra virgin olive oil and serve it as the summer prelude to dinner. Yum, yum, yum. Now remember, She used cremini mushrooms in this one. You can use anything of your favorite, any one of your favorite mushrooms. If you don't like creminis, use something else. It's just the sauteed mushrooms that you do in the garlic and oil, seasoned with a little bit of Himalayan salt that you use to top the French baguette that's got the fresh mutts and the garden tomatoes and the fresh basil. In any event, it's going to be a beautiful, hot day outside here in southern Florida. You can see it's humid because the windows are wet. But I will tell you already that as I drove to work, it is fairly humid. In any event, it's going to be another great day. So until tomorrow, take good care.